This is the time I will now use my Fibonacci, right? I'll put my fib on this high right here. Okay, I'll put my fib right on that high. This is another video where I'm actually going to be explaining in details the concepts that I showed you guys in the last video. Now, this particular strategy, it is not something that is very hard. All you just simply need to do is follow these instructions clearly according to how I'm going to show you guys the thing. So this is what we need, right? First of all, we need a higher time frame fair value gap, right? Let's just say price on the 4 hours time frame, on the 1 hour time frame. Let's say price structure is bearish, right? We're having lower lows and lower highs, lower lows, right? Now, what we need to do is we need to identify a higher time frame what fair value gap. And now one thing I need you guys to do is, if you are identifying a fair value gap, make sure that the fair value gap you're identifying is within this low range here and this high range right here. So that means the fair value gap you're looking for should be what, right within this zone right here. This is where you're looking for your fair value gap, right? Any fair value gap outside this range, it is not valid, right? That's not what I'm looking at. I'm looking at a fair value gap that is what, inside this range, right? So let's just say we have a fair value gap somewhere around here. Maybe you can use the 4 hours time frame, you can use the 1 hour time frame, but I use the 1 hour time frame, right? I use the 1 hour time frame and the 5 minute time frame for my entry and confirmation. Now, what I need to see next is I will have to wait for price to do what? For price to pull back. After giving me this fair value gap, I need to wait for price to pull back into this fair value gap on the 1 hour time frame. Okay, when market comes to this gap on the 1 hour time frame, what I now need to do is I'll now step down to the 5 minute time frame. When I come to the 5 minute time frame, I'm actually looking out for what? This type of structure. This is what I'm looking at. I'm looking out for 5 minute time frame to be like this. Now let's assume this is my fair value gap on the higher time frame on the 1 hour, right? Now if I come to the 5 minute time frame, I want to see market return to this fair value gap in form of higher highs, higher lows. You see, market will now tap into this fair value gap right on the 5 minutes. If price taps into the 5 minutes time frame or the higher time frame fair value gap on the 5 minutes, what you should be expecting or waiting for is for market to give us what? A market structure shift, right? When market gives you a market structure shift on the five minutes time frame, now this is market structure shift right here. Remember, this high right here will serve as our liquidity takeout, meaning that market have taken out liquid. There must be a high that market should take out. Please take note of that. This high right here will be our market structure, our liquidity. I mean, okay. So I'm just gonna mark it. Now this is my liquidity. Price tapped into the fair value gap, and here is the market structure shift. Right here is our market structure shift. After price gives us a market structure shift right here. Now, what you need to do is you need to make sure that your fib setting, what we are looking for is the OTE level. Now, make sure that your fib setting is like this, right? Let me show you guys the fib setting. Okay. Now, I need to include the 0.71 level. Now, this is my fib setting. You can pause the video, take a screenshot of it, and yeah. So this is what I'm looking at, or this is the fib setting I have. Now, what I'm looking out for is I will only wait for market to start pulling back. Once price start pulling back, as if it's coming within this range, as if price is coming inside this range right here. Now, this is the time I will now use my Fibonacci, right? I'll put my fib on this high right here. Okay, I'll put my fib right on that high, and I will extend it to the last low where price was stopped before pulling back, which is this low right here. Okay, sometimes market might just pull up a bit, and then you can see price come down again without coming into this OTE level. Now the OTE level is the 0.71 level, 0.81 level. Sorry, this red lines are my OTE level, so I'll mark it like this. Okay, this is what I'll mark. So like I said, sometimes price will not what price will not come into this OTE level. It's just pull up a bit and then you see price come down. Now what you're going to do is you wait for price again, right? If market now start pulling back up again, right? So what you're going to do is you now draw the fib from this initial level where you had it, you draw it down to this last point right here. You can see your entry points have changed from where it was before, and you now have your entry point. You now have your entry point what? Right here. So you mark the three lines of the fib. So when you mark it, and this is what we have, right? So you will now expect market to do what? Come into this zone, tap this OTE level, and we're expecting a drop to the downside. Now your target is only what? 1:2 RR. This is your target, right? This is your entry point right here. Your stop loss just above this last line right here, and your target is what? 1:2, which is usually what? This line right here. Okay. Now I'm gonna give you guys an example of this on the chart right now. So this is a quick one here. So if you're actually looking for the best broker you can actually trade with, if you're getting new into the forex market and you're looking for the best broker you would want to trade with, and of course get the best trading experience, the best spread, lowest spread, you can look into signing up with WinPro FX. Click the link in the description to join WinPro FX today. As you can see, there's an ongoing WinPro FX championship which you as a trader can be part of, and all you just need to do is click the link in my bio or the link in the description of this video, and once you get to the WinPro FX page, all you just need to do is open an account. All right, so this is how you can create your account on WinPro FX. If you get to this point right here, after you click the link in the description, you can come here. This is where you're going to create your account. Enter your full name, your email address. You can put your contact number depending on your country code. You can change this, right? And after you're done with that, you can see the country, the states, district. Once you fill up these details, you are going to do your verification. That's your KYC on WinPro FX. And now, a spoiler alert, right? I'm currently sending out free signals to traders who is going to register using my link in the description of this video. Once you sign up on WinPro FX, all you just need to do is send me a message, and I'm going to add you to the VIP group where I share free signals you can trade with. And of course, I have free course which you can actually go and watch and start your trading journey as a trader. I'll see you guys in the video. There's a real trade example of this setup, of this particular concept, right? You just need to follow it diligently, and trust me, you're gonna actually make money, right? So I'm gonna reset the chart. This is the 5 minutes time frame, but yeah, I'm gonna go to the 1 hour time frame. Like I said, I make use of the 1 hour time frame. So I'm just gonna look for where price is quite bullish, right? Where we have a very clear structure in the price. Now, first thing first is we can quite see that okay, from here, um, from this angle right here, from this guy right here, from this area, market is bearish, right? So what I can actually see in price is that market gave us a breakout structure right here. Okay, price gave us a breakout structure right here, and we can simply see that, like I said, if I'm looking for a fair value gap after a breakout structure, depending on the direction of market, I'm looking for my fair value gap from this range. I mean, within this range right here, this is where I'm looking for my fair value gap to trade from, right? So what's the first fair value gap we can actually identify? If I zoom into the chart, we can simply identify that we have this fair value gap right here. This guy, you can see it's quite unmitigated. This is the fair value gap that we have. All right, so if there's any fair value gap you can see right before this one, you let me know. But you can see, unfortunately, there's no fair value gap, so this is the only one we have. Now I mark out this fair value gap on the 1 hour time frame, and I'm waiting for price to react on it. So let's go down to the 5 minutes time frame. This is 23rd of March on Monday. So let's go to the 5 minutes time frame. Now we move down to the 5 minutes time frame. What can we see? Let's see what price did around that area. Now coming down to the 5 minute time frame on the chart, okay, remember what I said, I need to see market approach that fair value gap zone in form of higher highs depending on the market direction. So we are using a sell here. I need to see market approach it in form of higher highs and higher lows on the 5 minutes, whereas market takes out the immediate high, which will serve as our liquidity sweep zone, right? If market takes out the immediate high, I now want to see price give me what? A market structure shift, right? After a market structure shift, I'm expecting price to pull back to OTE, and we'll have our 2RR. It's just as simple as that. You don't need to complicate Forex, for real. You don't need to complicate, just follow the steps I'm showing you. So now we get onto this higher time frame fair value gap on the 5 minutes. What can we see? We can actually identify that price indeed moved into this zone in form of higher highs, higher lows. You can see, all right. So this is the last point that we have in price. This is the last high that market created, which you can see that market took out this high, right, which will serve as our liquidity zone, right? That will be our liquidity being taken out. Now, mind you, I use, when it comes to my market structure shift, I use the candle body. I use the candle body. If price takes out the candle body, that's my market structure shift right there. Okay, so as you can see, we have a market structure shift in price here. This is my MSS. After the market structure shift, immediately price start pulling back up. Now this is the time I will use my fib. I'll bring up my fib. I'll put it on this high right here. I'll stretch it all the way down to the candle body. This is exactly where I marked out this structure right here. This is where I'll put it on. So if I put it right there, now what can you see? You can simply identify that we have these three lines, which is the OTE level, right? I'll mark out the three lines just like this, right? It becomes my OTE level. Optimum trade entry, if you don't know what OTE is. So this is my entry right here. And what's the next thing? I will take in a trade. I'm not aiming for too much, just 1 to 2 hour. Taking a trade, put my stop just right above this high right here, and I'll focus and aim for 1 to 2. You can see this 1 to 2 hour. Easy, done. Right. So let's look for another example on the 1 hour time frame. So let's see price, what price did. After market gave us 1 to 2 hour right here, as you can see, price pulled up. This is a lower high, lower low. Market pulled all the way right here. Try to create a market structure shift or a change of character, which indeed it later did right here. As you can see, market gave us a what? A market structure shift. Now, after giving us a market structure shift, remember I said to you guys that if I'm looking for my fair value gap, I'm looking for it within the range. You see, the range before the strict change of character or break of structure, that's what I'm looking at. So the first fair value gap I can see, sorry, the first fair value gap I can see inside this range is this guy right here. This is the first fair value gap right here. Okay, so you can see this is it right here. First fair value gap, right? And what keeps my fair value gap valid, in case you don't know, as long as market did not close below this fair value gap I marked out here, you can see you just wicked it out. As long as price did not close below it, the fair value gap is still what? It is still valid. If you don't know how to you don't know how to mark out fair value gap, you can apply the nephew Sam, that's the FVG, IFVG, nephew Sam. Just type into your indicators, type for or search for nephew Sam, right? It's gonna give you it's gonna mark your fair value gaps for you automatically. So let's go to the 5 minutes time frame. This is on the 1st of April. All right. So we'll come to the chart on the 1st of April. So let's see what price did right there. All right, this is it here. This is the 5 minute time frame. So let's see. Now on the 1st of April, we can simply identify that this is the structure here: lower low, lower high, lower low, lower high, lower low. As you can see, this is the point where price took out, which serves as our liquidity, right? Here's the liquidity, and here is my market structure shift. Remember, I told you guys that my market structure shift, I use the body of the candles, right? So this is my market structure shift. Now, unfortunately, see what I said, if you pick your fib from here, if you notice, price got, after taking out this market structure, price got to here and we started having a pullback down to the OTE, but price continued higher again. Now, what will you do? Once you have to wait for price to start pulling back down. Once price start pulling back down, you draw your fib from the high, from the low to the high, and just like that. Okay, as you can see, market came into the OTE level right here, and we have our trade entry. So I'm gonna move this to the left. We have our trade entry. We target towards just 1 to 2 hour. You can see stop loss just right below here, and we focus on just 1 to 2 hour. You can see, very simple and easy. All right, I'll see you guys in the next one. Peace. If you have any question, if you have anything you want to drop in the comment section, drop it in the comment section and I'll attend to your comments. I'll see you guys in the next video.